Hello, my DTS compatriots and Forex lovers. Omar here, bringing you a look at the potential trades forming in the week ahead and a little bit of a recap as to what happened last week. Last week was a rather bad week to trade. Price did a lot of weird things. We had a lot of volatility, a lot of reversals, followed by moves again, and didn't make much sense. I didn't get very many good trades last week. It was a rather bad week. I got a few good ones on the euro yen, and that was about it. I tried to stay out of the market. When I feel that there aren't great opportunities to take, I generally avoid trading, and that is a good thing to follow. And I'm bringing up the daily chart here on the Euro USD. It's the exact same chart we used last week, and I haven't changed a thing on it. Remember last week we were talking about this area here, which is between 1.3300 and 1.3400. And I had been waiting all week for 1.34 to be breached and closed through, followed by a pullback and then a long. Well, that didn't happen. It came close to 3400, but it never broke through. So again, this is on the daily, and as you can see here, we just essentially stayed under this area here, but we never really got an opportunity to take shorts off of it. Remember, I had suggested that if we got a bounce off 3400, it would be good to take a short. We never really got that chance. If you were taking bounce trades to the long side, as you can see, these wicks here pretty much kept you stopped out, and then price would go on. Also, another thing to notice, that the midweek daily candles here are dojis. And what that means is that price is essentially stuck, and it can't really go anywhere, and people try to push it up, and then it gets pushed back down, and it gets pushed back up. Those are generally situations where you don't want to trade. People ask me all the time, well, how do you recognize a bad market to trade? And if you see this on the daily chart, that's a pretty good time to stay out of the water. So anyway, we finally got our breakout that we were looking for on Friday, and that's this candle here. It closed a good ways above 1.34, and if I was somebody who traded Fridays, I'd probably be excited about it, but I don't go chasing after the market. Now, what would have happened if you saw this breakout and then you took the trade? You would be below your entry, and you'd be in drawdown right now. So what I prefer instead is to wait for the market to come back to that area. Remember, if this is an important resistance line, it should now be support. So as the market comes back and tries to test that area, it should, I mean, according to what happens normally, reject and then continue on upwards. Of course, it doesn't have to do that. It can always break back down through it, but that's our preferred trade so far for this week. So we'll be looking for price to come down about 30 pips, 25, 30 pips to the 3400 area. It doesn't have to be exactly at that area. And then we will be looking to take a DTS long from it. As far as if price breaks back down through, you know what, I'm just going to leave it alone, folks. My ideal trade is going to be a long off 3400. If price continues to move away and it never pulls back, then we'll talk about those options when that happens. But for right now, the euro looks good on a pullback followed by a DTS long off of 3400. And let's go ahead and take a look at the pound. Alright, here is the pound versus the US dollar on the daily chart. Now, one thing I like to use a lot in my trading is correlation. And for those of you that don't know what correlation is, it means that how closely related each pair trades to one another. A positive correlation means that when one pair goes up, the other pair goes up, and negative correlation means when one pair goes up, the other pair goes down, and vice versa. So the pound and the euro against the US dollar do tend to be positively correlated, although the strength of that correlation does vary from time to time. And at the moment, we are experiencing one of those times. Remember, we were just talking about the euro and we're looking for a long. Well, if you look at the pound here, it's the exact opposite. So 1.6000,
Scalp.
which is up here, that had been breached to the downside. Remember, that's a hugely important number. And then our next support level, which was at around 1.5820, that has also been broken and closed through with a breakout to the downside. So if we hadn't already looked at the euro and we just looked at the pound, and this is, you have to analyze each pair individually, we'd actually be looking for a short. I would want a pullback to this area, to 58.20, followed by a DTS short signal away from it. Would I take the euro long and the pound short at the same time? Absolutely not. I still don't trade, even at this time, I wouldn't trade those pairs in opposite directions. So how would I choose between the two? To be honest, it's be the trade I took first. They both are giving information that has to be viable on its own. And even though there is a good potential that you could take a long on the euro and win with a short on the pound US dollar, I've just learned I don't like to do that. So you have to kind of use your own discretion with those things. But in general, I tend to be more aggressive in some ways and more conservative in others. And with correlation, I just tend to be very conservative. So if I'm not in a euro trade and I find a good setup on the pound short, I'll take the pound. If I find a good setup long on the euro, then I'll take the euro. It all depends on what presents itself first, I suppose. But that's essentially what I'm looking for on the pound, unless we get a nice, which actually this would even be more preferable. If we got a nice breakout again to the upside here, broke back through 58.20, pulled back, and then we got a nice DTS long signal away from it. The reason is that we have a relatively short stop loss here of about 30 pips, and then our potential upside is 180 up to 1.6. So that's a very nice reward risk ratio. And that about sums it up for the pound. So let's look at the Australian dollar versus the US dollar. Alright, and here's the Aussie versus the US dollar. Last week we had discussed trades that seemed to be the price seemed to be trapped between 1.0500 and 1.0600. I said we could take shorts off 1.0600 or wait for a breakout to the upside, or we could take bounce trades off 1.0500, and actually there was one good trade in there, and it yielded about 60 pips towards the later part of the week. But just as anything can happen Friday, the euro broke up and the pound and the Australian dollar broke to the downside. Remember, I discussed this area here as no man's land. We wouldn't be looking for trades in there. But now that 1.0450 has been broken to the downside, just like the pound, we'd be looking for a pullback to that area, followed by a DTS signal short. And the reason is that you have a very nice reward risk ratio. You could either be aggressive and put your stop here, or if you want to be a little more conservative but safer, you can put your stop up here. The second option doesn't give as good reward risk ratio, but it does offer a bit more safety. Essentially, I'd be looking for the pullback with the short, and we'd be closing out our positions somewhere around 1.0325. And if price does happen to go back up, which of course it can, we would want price to pierce 1.0500 first, make a little pullback to test the support, and then a long, and we'd be closing out our position at 1.060, and then wait for another breakout or a short off of that line. So that does give you plenty of options. We have one faster moving short pullback and then a downside trade, or if price manages to get above 1.0500, we'd be looking for a little bit of a pullback and then a DTS signal long and take it up to 1.060. And then of course ultimately, If price can break through 1.060, which has been a major resistance for quite some time, I'd be looking for a pullback, and then I would be all over that long. And that's pretty much it. I suppose, of course, if you get a bounce off of 1.0325 with a long signal, you could also take that. So that's pretty much how the Aussie sets up. Let's go ahead and look at the yen crosses. And here is the euro versus the yen. This pair has gone from having very mediocre ranges last year in 2012, where it normally didn't even break 100 pips on the daily range, to having some regular, pretty big days so far. I've seen a lot of 150 pip ranges, quite a few over 200, and even some over 300. And the thing I like about that is with big moves, you can make good returns. It can give you some very big reward-risk ratios, as the pair can run on several hundred pips in 1 week, which gives you a lot of breathing room and gives you a lot of options with your stop. So you can be conservative and move your stop along behind big areas of support and resistance. You can be moderately conservative and maybe trail it behind swing high, swing low on the 1 hour chart or on the 4 hour chart. Or you could be aggressive and trail it by just a little bit of pips to capture the most out of your trade. And when a pair moves a lot, that gives you a better option to do that. If you're only up 20 pips, your options are limited, and even a little bit of volatility may take you out of the order if you move it to break even, or you're up by 20 pips and you don't move your stop and then it comes back and takes you out, and that's pretty frustrating. Or you can tightly trail your stop and probably not get that much of a move out of it. So finding pairs that do move a lot is helpful, although they can produce bigger initial stops and do sometimes come with a little bit of added volatility that may take you out before it moves all the way through its big move. Looking back to last week, we had looked for trades to bounce off the 118 area to the long side, and I made a little bit Thursday morning by capturing a nice trade off of that area, and that was pretty much my only good trades this week were those. So Friday, and I don't trade Fridays, we finally got our breakout of this area, and that's at around 121.40 if I'm not mistaken. Yeah, around 121.40. And just like the Euro USD, we see that the Euro Yen made a breakout of an important area on Friday. So now what we'd be looking for is a nice pullback to this area, followed by a long signal. Or alternatively, if it does come piling through again, we just wait for the pullback and then a short. Of course, if it comes all the way down here again, always look for a bounce trade away, and so on and so forth. So the Euro Yen is one to keep an eye on, and of course this is a really good pair lately. So keep an eye on it and give the stops a little more breathing room. And let's go ahead and check out the Australian dollar versus the yen. Can anybody guess if that's gone up or down? Alright, here's the Australian dollar versus Japanese yen. For whoever said it went down because they remembered that the Australian dollar has gone down, good for you. They are very correlated, and as the Australian dollar moved down, well, so did the Australian dollar versus the Japanese yen, in addition to the dollar. Again, 95 has been quite the resistance. Again, it failed to break through and close, so our trade that we're looking for, just like we're looking for the pullback in the short on the Australian dollar versus the US dollar, is a pullback to 95 followed by a short. If 95 is breached, which would probably eerily coincide with 1.0600 maybe being breached, then we would be all over a pullback to 95 followed by a long. And that would be the ideal trade on this pair. Again, something I think I may have brought up before, but I like to keep mentioning these things, is rollover swaps. The Australian dollar has a very high interest rate, and usually since we traded against the US dollar, which interest rates are around 0, and the Japanese yen, which is about the same, we find that the rollover swaps when you're long on the Australian dollar versus the US dollar or yen tend to pay out very nicely. But conversely, if you take them short, as the day rolls over, you pay a rollover swap. So one little trick I like with the Australian dollar pairs is that I just like to take them long. I don't take very long-term shorts on them, and I miss out on some pips, but I just don't like getting a chunk out of my trade taken every day on the rollover swap. So I usually look to other pairs when it's time to short, and when it's time to long, I love the Aussie, and it keeps me in trades a bit longer sometimes, which usually ends up being better because if you catch it in a good trend, it goes on for longer. And with other pairs, I always seem to like to bank my profits, because you can't pay your bills with potential profits. You have to pay them with bank profits. And
Scalp.
I know a lot of people would argue that that's maybe not the correct mindset, but you got to make a living somehow. So anyway, those would be the trades that I'm looking for this week on the pairs. And of course, if anybody has any questions, feel free to email me at Omar, O-M-A-R, at dtsforexsystem.com, and I'd be happy to help you out. I look forward to our live trading session tomorrow, and we're going to be doing the New York session. So I look very much forward to seeing you there, and very happy trading to everybody.